What's up, Mindful Mentors 12 community? Today we're diving into a wild question. Can $300 in green energy penny stocks become $30,000 by 2026? It sounds crazy, but I've got 7 picks that could make it possible. If you're new here, welcome. We break down finance so you can make your money work for you. Before we jump in, hit that like button and subscribe for more wealth-building tips. Green energy penny stocks are hot because the renewable market is set to explode. Trillions of dollars are flowing in, and small companies could see massive gains. But remember, penny stocks are risky and volatile. This is for educational purposes only. Always do your own research before investing a single dollar. Let's get into our first stock. First up, we're shining a light on Sunworks. That's ticker SUNW. Keep that ticker in mind as we delve into why this company is catching our eye. Sunworks is a California-based solar installer, and they're not just staying put. They're expanding fast, making strategic moves across the U.S. They're not just sticking to California. Every new market they enter means a fresh stream of potential revenue. This expansion is key to their growth strategy. Sunworks is riding the ever-growing wave of homeowners who are eager to cut those hefty energy bills and embrace a greener lifestyle. Residential solar demand is not just growing, it's spiking significantly as more people recognize the long-term benefits. And, with this surge in demand, Sunworks is strategically positioned to benefit substantially. They're in the right place at the right time. Some analysts are quite bullish, seeing a potential 100% upside here. That's a significant projection. Yes, you heard that right, the chance to potentially double your money according to some analysts' projections. But remember, the solar market is a competitive arena, and Sunworks must execute flawlessly, delivering top-notch service and competitive pricing to truly stand out from the crowd. Scaling up operations requires significant investment, so keep a close watch on their cash flow. Pay close attention to their quarterly earnings reports for insights into their financial health and growth trajectory. Government incentives like tax credits and rebates are acting as a huge tailwind for the entire solar industry, giving Sunworks a clear runway for continued growth and expansion in the coming years. What are the potential risks to consider? Intense competition and any operational hiccups along the way could potentially hurt their progress, but the potential upside remains very real. Sunworks is demonstrating that it is a nimble and adaptable player in what is undeniably a booming sector. If they can successfully manage their growth in a sustainable and efficient manner, this investment could turn out to be a significant winner in your portfolio. Be sure to keep a close eye on their ongoing expansion efforts and, of course, their financial performance. Add SUNW to your watch list so you can track its progress, and be sure to dig deeper into their financials and strategy. The solar energy boom is really just getting started, and the future looks bright for companies in this space. Now let's shift our focus and move on to our next promising stock pick. Number 2 on our list is SPI Energy, ticker SPI. This company has carved out a unique position in the renewable energy market. They present a rare and compelling play in both the solar energy and electric vehicle sectors, making them a standout in the green energy revolution. SPI Energy doesn't just talk about sustainability, they actively develop, finance, and operate solar projects on a global scale. Their commitment extends beyond mere installation. This extensive international presence gives them a significant global reach and a diverse portfolio of projects, reducing reliance on any single market. But here's where things get interesting. The twist is their Phoenix Motorcars division. This is where they directly engage with the electric vehicle market. Phoenix Motorcars is dedicated to crafting electric vehicles and providing comprehensive charging solutions, catering to a growing demand for sustainable transportation. Their primary focus is targeting commercial fleets, a sector ripe for electrification due to increasing environmental regulations and cost-saving incentives. We're talking about delivery vans, airport shuttles, and other work vehicles that are essential for daily operations and are now transitioning to electric power. They're strategically positioning themselves right as those markets electrify, capturing a significant share of the burgeoning electric fleet market. SPI's integrated approach is a key differentiator. It means they can offer both the electric vehicle and the solar-powered charger, creating a synergistic ecosystem. This provides customers with a one-stop green solution, simplifying the transition to sustainable energy and transportation. Strategic partnerships are playing a crucial role in fueling their rapid expansion, allowing them to scale operations and reach new markets efficiently. These collaborations are also opening new revenue streams, diversifying their income sources and enhancing their financial stability. However, the risk lies in the complexity of managing both solar and EV divisions, which is inherently capital-intensive and demands careful coordination. Therefore, it's crucial to watch their balance sheet closely for any signs of excessive debt or potential stock dilution, which could impact shareholder value. Success in even one division, whether it's solar project development or electric vehicle sales, could send the stock soaring, reflecting the company's growth potential. But if both divisions fire on all cylinders, the sky's the limit for SPI Energy, positioning them as a leader in the green energy transition. However, execution is everything in this competitive landscape. Any missteps or delays could drag them down, hindering their progress and market position. Given these factors, this is undoubtedly a high-risk, high-reward play, suitable for investors with a higher tolerance for volatility. To stay informed, closely monitor their quarterly reports for tangible progress in both the solar and electric vehicle sectors, assessing their ability to deliver on their promises. So, if you're seeking exposure to two powerful green megatrends, solar energy and electric vehicles, SPI is certainly worth a closer look and deeper consideration. Just be sure to conduct thorough research into their financials, evaluate the strength of their partnerships, and understand the competitive landscape. Let's move on now to our wind energy pick. Third on our list is Broadwind, ticker symbol BWEN. This company might not be a household name, but it plays a vital role in the renewable energy sector, specifically within the wind energy market. Broadwind is a crucial yet often unseen force in wind energy. They operate behind the scenes, providing essential components and services that keep the wind industry turning. Their primary business involves manufacturing the massive steel towers that support wind turbines. These towers are enormous feats of engineering, requiring specialized facilities and expertise to produce. These are the very same towers that wind farms across the country rely on, making Broadwind a key U.S. supplier in this critical area of wind energy infrastructure. Without these towers, the turbines simply couldn't stand tall and generate power. As wind energy surges in popularity and becomes an increasingly important part of the energy mix, Broadwind stands to directly benefit from every new wind farm project that breaks ground. More projects mean more demand for their towers and components. Their strategic focus on domestic manufacturing within the United States gives them a significant edge, particularly as the U.S. government and private sector alike push aggressively for greater energy independence and reduced reliance on foreign sources. Beyond just towers, they also manufacture precision components for various industries, which adds valuable diversification to their revenue streams and creates higher barriers to entry for potential competitors. This diversification helps to insulate them from fluctuations in the wind energy market alone. The continued growth of the wind industry inevitably translates to a need for more towers, directly resulting in more business opportunities and increased revenue potential for Broadwind. However, it's important to note that their revenue can be somewhat lumpy and unpredictable, as it's closely tied to the cyclical nature of large-scale wind farm projects and the ever-changing prices of steel. Unexpected increases in steel costs or unforeseen project delays can significantly squeeze their profit margins and introduce volatility into their stock price. Therefore, it's crucial to closely monitor commodity prices, particularly steel, and keep a watchful eye on the progress and potential delays in major wind energy project pipelines. If the projected U.S. wind energy boom truly materializes and expands as anticipated, especially with the development of offshore wind farms, then Broadwind has the potential to emerge as a major winner in the renewable energy landscape. Their specialized expertise in manufacturing these massive structures, combined with their established facilities, would be incredibly difficult and costly for competitors to replicate quickly. Of course, the risks are very real, but so is the potential upside if wind energy continues its current trajectory and truly takes off as a dominant energy source. BWEN offers an under-the-radar way, a less obvious approach to participate in and potentially profit from the ongoing wind energy revolution. Therefore, I highly recommend adding it to your investment research list for further investigation. Next up, let's shift our focus and talk about the crucial role of energy storage. Fourth is Ultralife Corporation, ticker ULBI, solving the biggest challenge in renewables energy storage. They design high-performance batteries and power systems for grid stabilization, backup power, and remote monitoring. Their specialty in robust, critical-use batteries means better margins and loyal customers. Ultralife's history of government and military contracts is a huge credibility boost. As green infrastructure spending rises, they're well-positioned for big deals. Every solar and wind project needs storage. Ultralife is building the tech to make renewables reliable 24/7. The battery space is fiercely competitive with giants like Tesla and LG Chem. Ultralife must keep innovating to stay ahead. Heavy reliance on government contracts is a risk. Losing one could hit revenue hard. Look for signs of customer diversification. The energy storage market is exploding and Ultralife is a specialized player. High risk, high reward, but the opportunity is massive. Watch their contract wins and product innovation. ULBI deserves a spot on your watch list. Now let's explore hydrogen. Fifth is Plug Power, ticker PLUG, a leader in hydrogen fuel cell systems. They power forklifts for Amazon and Walmart, proving their tech in real-world logistics. Now they're expanding into stationary power and on-road vehicles, targeting huge new markets. Plug Power is building the entire green hydrogen ecosystem, from production to distribution. Their push into Europe, where hydrogen is booming, could be a game-changer. The risk? Plug Power is burning cash to scale, and has yet to turn a profit. The hydrogen economy is still early, with technical and economic hurdles ahead. If green hydrogen costs don't fall, or batteries win out, Plug's vision could stumble. Still, Plug Power is a pure play on hydrogen's future. They have big customers, global expansion, and a bold strategy. Volatile and high risk, but the upside is huge if hydrogen takes off. Watch their financials and European growth. Let's move to EV charging. Sixth is Blink Charging, ticker BLNK, building the charging stations that power the EV revolution. For every electric car, a charging station is needed. Blink is filling that gap. They own, operate, and sell charging equipment, creating multiple income streams. Blink is expanding rapidly across the US and internationally, blanketing the map with their brand. The EV market's explosive growth is a massive tailwind. Their recent acquisition of SemaConnect instantly boosted their network and tech. Aggressive partnerships and M&A are helping them scale fast. But competition is fierce. ChargePoint, EVgo, and even Tesla are all in the game. Blink must keep innovating and delivering a seamless user experience. Financially, they're still unprofitable as they invest in growth. Building infrastructure is costly, and revenue takes time to catch up. Patience is key for investors here. If you believe in EVs, Blink is a direct play on the infrastructure they need. Watch their expansion pace and financials. Now our final high-stakes pick. Seventh is Fuel Cell Energy, ticker FCEL, the ultimate high-risk, high-reward clean energy stock. They design and operate fuel cell power plants for utilities, microgrids, and hydrogen production. Their tech can run 24/7, providing reliable baseload power, a key grid stabilizer as renewables grow. Fuel Cell is scaling up to larger projects with big partners like ExxonMobil. If their tech proves cost competitive, they could transform the energy grid. But the risks are huge: a long history of unprofitability, stock dilution, and unproven economics at scale. Competing with established energy sources and new tech is a major challenge. Success depends on continued innovation and cost reduction. This stock could soar or go to zero. It's not for the faint of heart. Watch for project completions and financial improvements. FCEL is a speculative bet on breakthrough clean energy. Only consider it if you have a high-risk tolerance. That wraps up our 7 picks. Let's talk about your next move. There you have it, 7 green energy penny stocks with explosive potential by 2026. Remember, penny stocks are risky. Never invest more than you can afford to lose. Use this video as a starting point. Dive deep into each company's reports and news. Follow green energy trends and government policies that could impact these stocks. Consult a financial advisor before making any big moves. If you found value, hit like, share, and subscribe for more wealth-building content. Drop a comment. Which green energy stock are you watching? Until next time, invest mindfully.